Kevin Hincks, co-host of Fast Market, is here from the CBOE. Good morning, Kevin Hincks. Great to see you. We have some down arrows again this morning. Some of your thoughts.
Good morning, Nicole. I think this is a product, this morning's opening is a product of the news headlines over the weekend. Some of the drama going on between President Trump and the administration and Jerome Powell, and overall, still a headline-driven market where there wasn't any headlines over the weekend. There wasn't any announcement of any trade deals. So, again, I remember it was Kevin Hassett that posed the question, do we announce them one by one as they come in, or do we do it all at once? Well, we're waiting. The markets are waiting patiently for some type of an announcement when these supposed trade deals are supposed to happen. Now, to this week, we're starting on the downside. From the highs, Nicole, to Friday's close, the S&P down 14%, the NASDAQ down 18%. Add another 1% today, and it's 15 and 18. So that's where we start the week. We don't have a lot of economic data out this week. We've got some housing, we've got some regional data, but we do have durable goods, and then the all-important, very controversial consumer sentiment data that we're going to get out on Friday. But I think earnings and headlines are going to take over this market soon. We've got GE Aerospace tomorrow morning, Tesla tomorrow after the bell. Then we got Boeing Wednesday morning. Then we've got a bunch of big names Wednesday afternoon. Then, of course, Google Alphabet after the bell. So far, the banks and the airlines have had a pretty good start to earnings season with some of their numbers. And remember, the airlines are all beat up, so you are going to get American and Southwest on Thursday morning. But I think it's going to be Tesla, it's going to be Boeing, it's going to be Google Alphabet. Google Alphabet not only has earnings, but they have a lot of headlines coming up with their current trial coming on and rulings that should affect that stock. But all things considered, we're looking at a market that has already corrected. Remember something. Headlines, very transparent headlines between the Trump administration and Jerome Powell, because the Trump administration wants lower interest rates. Every administration wants lower interest rates. They're maybe just not as vocal or out in the open as this little spat has come. But make no mistake, every president wants interest rates lower. So that's where we start to trade the day. The markets are already off their lows, but still down over 1%, Nicole.
Right, understood. I mean, we have a dollar that's lower. Gold, people are still running to gold as a safe haven today. That's what we've been seeing, and not surprised. I mean, it's certainly an overcrowded trade. People were talking about it from last week. They're even going, surprisingly, to Bitcoin. I'm not sure that, sometimes that that's a high risk sort of thing, right? But they've gone to Bitcoin too. Very interesting to see gold and dollar on the moves the way they are. The dollar at 3-year lows. People don't love that. You mentioned the Trump-Powell riff, and I didn't know what to call it. 4.39%, so that's making the bond yield tick a little higher. It's making people a little nervous. They don't like to have any ruffled feathers,
So let's give the Schwab Network viewers some perspective. Everyone's talking about the 3-year lows in the U.S. dollar. Well, throw up a 20-year chart of the U.S. dollar, Nicole. The U.S. dollar is not historically low right now. The first time it touched 100 was briefly in 2015. Then it touched it again briefly in 2017. Before that, the U.S. dollar was never over 100. If you look back 20 years, it was in the 80s, high 80s, low 90s. So historically, this is not a low U.S. dollar. But the U.S. dollar has been so strong over the last 6-7 years that you're seeing it come down off those highs. And you're right. The U.S. dollar, in terms of us buying foreign goods, makes those goods more expensive. But it makes our goods from U.S. multinationals that are selling abroad, it makes those cheaper. So there's a double-edged sword, but I push back on the fact that the U.S. dollar is cheap. It is not historically cheap. You just got to go further out and widen your sample data and see that the U.S. dollar is actually not cheap. It was just extremely high for the last several years, Nicole.
Yeah. Who said it was cheap, by the way? Did you read that somewhere? Or is that rhetoric? I mean, I said 3-year lows, but
well, everyone's saying it's hitting 3-year lows like that is some type of crisis when it's spent most of its time below 100 over the last 20 years. So I just don't think the U.S. dollar is as low as everyone thinks it is, and in some type of crisis area. So those are the headlines that every American watching TV over the weekend and watching the news shows has seen. The media is talking about the U.S. dollar going down like it's some type of horrible thing.
Well,
historically, it's not that low.
Yeah, and I love that you brought that perspective, because you're 100% correct, right? I mean, the 80s is low. 100 is not low.
Yeah.
I do think that there is still the worry and in the rhetoric about whether or not the dollar stays as the reserve currency for the world. I mean, that conversation's been going on too. You have the BRICS nations, you have people using digital assets. I don't think the dollar's in jeopardy at this moment for being the world's reserve currency, but people love to throw around that conversation.
Yeah, I mean, the rhetoric always goes to the worst case scenario, and there's one of the issues that investors have to face today is the overwhelmingly negative sentiment of the media and how they cover the administration and the markets. And you have to work against that. And so, or make your decisions based on that information. It's very difficult to navigate when the media is overwhelmingly negative and the news flow is overwhelmingly negative. Does that mean some of it's not true? Yeah, some of it is true. There is issues going on with tariffs, but I just think that the rhetoric is so incredibly negative right now. Remember, we're down about 15% if we open right here on the S&P off the highs, about 18% on the NASDAQ. Earnings so far have been relatively positive in terms of the banks and some of the airlines. And so we're moving into that second phase of earnings, which is large cap tech. Tesla, Google Alphabet, we'll get Boeing this week, I think is good. So I think we're going to get a much better look at the U.S. overall this week during earnings season. So, yeah, I think, but the 32 VIX to start the week shows us that volatility is still here. These markets are still very choppy and volatile, Nicole.
But I'll tell you, we've been somewhat desensitized to the smashing headlines. You know, now you're not seeing markets with those big swings anymore. I think the VIX above 30 still shows that there can be volatility, like you're saying, but we're not swinging, you know, thousands of points anymore, and not at the moment.
Right.
We could. But I think that we've been taking in some of the headlines. Like last week, we didn't have the big swings anymore. Let's talk about also earnings season. You mentioned Tesla, GE, Boeing, Google, Alphabet. You know, I think that everybody's saying that the past quarter we're going to get some good news, but the outlook being somewhat uncertain. I wonder what we'll hear.
Yeah, that's a key part, right? Because it happened in the first quarter as well. Fourth quarter earnings all beat on a significant amount beat on revenue and earnings per share, but the guidance was very conservative and very careful, and I think the market reacted to that as it came off its highs. Now we'll see how these CEOs, remember the three-legged monster of earnings season is earnings per share, revenue, and then that guidance going forward. That CEO gives their view into the next 3, 6, 9 months. And so some of it's been very cautious, but how are these CEOs going to paint the picture going forward? That's, I think, a key to how these stocks will move. We've got Netflix up after beating some tough comps from a year ago. I think that's pretty good news. So overall, the earnings are coming in fairly well, but guidance is such an important part of the earnings the triple header that earnings comes out with. So guidance is very important. We'll see what happens this week.
Yeah, and some of them have come out and they haven't been doom and gloom. One actually had multiple scenarios last week. Was it UAL?
Yeah.
They had
United Airlines did a great job of giving 2 different scenarios based on that. Yeah, I think that's a great job.
Yeah. Kevin Hincks, wonderful to see you on this Monday. We have a busy week ahead. Looking forward to covering it all with you. Thank you.